What's up, you guys? It's Rob here. Hope you all had a nice long weekend away from the market. This is going to be your comprehensive guide to the market for the week of April 10th, 2023 to April 14th, 2023. We have a lot to talk about, guys, so just strap in. It's going to be a lot of information. I'll try to drop some time cards down below so you can jump around if you want to review certain things, but we're going to be talking about the market news that's coming out this week. We got a lot of news. We also got a lot of Fed speakers as well. We'll talk about the major indices and we'll give a nice recap of those and where we might be looking going into the week ahead. We'll talk about the sectors as well. We'll talk about TLT and we'll talk about Dixie and we'll talk about my watch list finally to end out the video. Now that's a lot of information I just thrown at you. So before we dive into it, if you can, do me a huge favor. Drop a like down this video, hit that subscribe button, and make sure you ring that bell for the YouTube algorithm. It really does help me out a lot. But let's dive on in here and take a look at Market Watch and the news that we have coming out. Monday, really don't have a lot of news to talk about here. Tuesday, we have 3 Fed speakers thrown at us. We have Gooseby, okay, Harker, and then Kashkari. So we have the 3 of them on Tuesday. On Wednesday, we have core CPI, well, my bad, CPI coming out, which is your consumer price index. And then we have Barkin that's going to be speaking at 9 a.m. before the market opens. CPI is going to be before the market opens as well. At noon Eastern Standard Time, we have President Daly speaking. And then we have the Treasury budget to talk about at 2 p.m. And then at 2 p.m. as well, if it just isn't enough news for you, we get some FOMC minutes thrown at us, which is going to be interesting to take a look at. And on Thursday, it doesn't stop. We get the producer price index, we get PPI, and then we get jobless claims all before the market opens. And then on Friday, if you think everything is fine, everything's pretty much fine. The only bad thing that we have with the market is the bulls have Waller speaking, is who is known to be pretty much a hawk at this point and not very dovish. So that's really the only thing that we have covering on Friday, but really Wednesday and Thursday are definitely going to be doozies of a day. Now, if we hop over here and take a look at the major indices, just as a reminder, we have our daily candles opening, we have our 2-day candles opening, we have our 3-day candles opening, we have our 10-day candles opening, we have our weekly, obviously, and our 2-week candles opening this week. So just chart all those out and just keep those time frames in mind, because remember, from a strat perspective, we want to look at multi-time frame analysis to formulate a plan and to build a story of where price is going so we can win ultimately. Now, for the previous week here, we did trigger 2 up, but we did see a decent retracement on SPY. Now, we do have full time frame continuity to the upside, unlike some other indices we'll talk about here. We are still inside on the quarterly. We do have a 2-2 rev here on the monthly time frame, and we're going to be looking at 418.31 is going to be our target at that point for SPY. So that's really all you need to know about SPY. On the weekly time frame, if you want to play your trigger for calls, it's going to be 411.92. And then down below that for puts, it's going to be 405.68. It's a pretty decent size range, and SPY has been moving a lot recently. Now, if we do take a look here at QQQ, QQQ is a little bit weaker because we did trigger to up on most of our time frames here. We did trigger it up on the quarter. We did trigger it up here on the month. We did trigger it on the week, but we saw a little bit larger of a retracement here. To be exact, weekly, we pretty much bounced right off of the 50% retracement, which is a good thing to see. So we can pretty much play 321.63 to the upside for our calls, and then really using this 50% at 312.97, we could play puts to the downside. So really, Qs overall do look weaker right now from a full time frame continuity perspective, but could easily flip that back. And the point that we would flip that back is going to be on this candle at 320.42. Let's see if TradingView will give it to me. No, it won't. Nope. All right, TradingView is not going to give it to me. So at 320.42 is when Qs flip back to full time frame continuity green. Now, if we take a look here at the Dow Jones Diamonds, Dow Jones is definitely one of the strongest indices right now, taking a look at it. And really, the huge thing I want to talk about is this past week, we gapped up here on Monday and left this nice imbalance here. And we bounced off of it on Tuesday, and we bounced off it on Thursday. On the week, we got that 2 up. We also left that weekly imbalance as well, so we have to keep that in mind. Now, the Dow Jones Diamonds, it's got that 3-1 setup on the quarterly. So 343.53 still remains our quarterly trigger, as well as 314.97 is our quarterly trigger for puts. Now on the month, we did trigger that 2 down, 2 up here. So we got that 2-2 rev strat to the upside. Our immediate target's gonna be really 343.53 to the upside. Dow Jones, full time frame continuity green, SPY green. QQQ is mixed. Now let's talk about good old Rusty Dusty, because Rusty Dusty here is definitely the weakest indice of them all, to say the least. We have a lot of time frames red here. We got the quarterly, we got the monthly, and we got the weekly. And we got the day that's green, but we finished inside. If you take a look here, down here in your bottom left-hand corner, pretty much Rusty Dusty almost went full outside bar on the week. We do have a nice double bottom here, so that is going to be something to take a look at. If we wanted to play Rusty Dusty here for the weekly, 179.78 is going to remain your call trigger, and your put trigger is going to be 172.53. Now, if we take a look here at the quarterly time frame, we got a 2 down, we got our inside bar, which we pretty much fully retraced. We got a 2 down here and a 2 up. So we're a little bit all over the place, kind of flagging. This almost looks like a bear flag to me. And we're inside and we're almost pushing down here. The quarterly, if we wanted to trigger down, it's gonna be at 167.46. So just keep that in mind for good old Rusty Dusty. Definitely the weakest indice of them all. If we had to go, it would be Dow Jones Diamonds, SPY right now, QQQ, followed by Rusty Dusty. Now let's go in here and start talking about the sectors. So the sectors, there's a lot of them, so just pardon me. I'm gonna only look at these from a weekly time frame, really, because we're looking at this for the week ahead. XLC, definitely a very interesting sector for me. If you're an ICT person, I pretty much see the market maker buy model on this. We sold all the way down. You got an inverted head and shoulders as well. You got the shoulder here, head here, shoulder here, boom. Hopefully definitely plays out. We do have a lot of green volume here stepping in, so buyers are stepping in here on XLC. Taking a look at XLY, XLY has really just been shopping around here. But for the weekly, we got an inside bar here, so it's very easy to play. 149 is going to be our trigger for calls, and then 142.89 is going to be our trigger for puts. You do see that conflict here in your full time frame continuity, so you do have that to keep in mind. XLP are consumer staples here on the week. We got a 2 up trigger. We're just going to be basically looking for continuation, and if we can immediately take out 76.25, if we can, really the next point at that is going to be 77.62. So consumer staples definitely do look strong. Going in here and taking a look at XLE, XLE to me looks extremely bearish here. We got that trigger up off of all of the OPEC news and everything coming into last week. And if we take a look at this, we got a failed 2 up here, which is incredibly bearish, and we got a nice gap here. So if we want to play puts, 84.25 is going to be your put trigger. And really on the weekly time frame, your first immediate time frame look, your first price target, to look at is 82.97. And then we want to take out that whole entire candle. If we do, it's going to be moving down to 78.08. If we take a look here, we got a decent amount of sell pressure step in. Our squeeze indicator is pointing towards the downside as well. If we take a look at XLF, consumer financials, we do have some banks reporting on Friday. I do want to just note that we do have banks reporting on Friday, which is going to be a thing that is definitely going to impact XLF. But we got a failed 2 up here. So we could just immediately reverse back down and trigger that 2 down, which would be at 31.66. Our PT is going to be at 31.22. We wanted to play calls. We could. We got 32.34 as our call trigger. And then really our next Target after that's going to be 32.85. If I zoom in here more though, I do want to point out, let me draw a square here for this. From this body to this body, we do have a nice imbalance here, volume imbalance, that we haven't been able to fill a body in, but it's definitely going to be something interesting to take a look at here. Now if we hop over here and take a look at XLV, XLV has been absolutely on a bean. You got this 3 2 down 2 up reversal, and it said see you later. We got a nice PMG here to the upside, and I could just sit here and name targets one after another. It's very easy for XLV like to see upside because you get that PMG to the upside. If we stay inside, because this is a pretty decent size move on XLV, just take it what it is at and just play the inside candle the following week. So taking a look here at XLI, which is going to be our industrial sector, we had a massive failed 2 down here. So really your put trigger is going to be 97.34 and your immediate PT is going to be down here at 95.50. If we wanted to reverse and just say, hey, screw everyone who's thinking bearish on this, 101.77 would be your call trigger, followed by 104.18 would be your first PT for XLI, which is your industrials. Now taking a look at XLB, which is your materials sector, we got a nice failed 2 up here, so it looks like we're going to be making a nice reversal here. We do have several time frames red. We're really only green on the year. The squeeze indicator is pointing down. We do also see a lot of red volume stepping in here, so our put trigger is going to be at 79.04, and then our first PT is going to be 76.82. If we wanted to flip it and try to play this to the upside here, 81.38 is going to be the point for our calls, and then up here at 84.27 is going to be our next PT to take a look at. So overall, XLB materials definitely does look bearish. We do have that time frame to the downside, so I would be looking to play this more down, and you could use 81.38 as your invalidation level. Now, if you do take a look here at XLRE, your real estate ETF, wow, failed 2 up here. This has just gotten the part of my language, the piss beaten out of it. So to the downside here, you got 36.65 would be your put trigger, and then your first PT would be $35 on the dot. You got a squeeze indicator to the downside. It looks like there's a little bit of a battle going on here with bulls and bears. So if we wanted to flip the narrative and play this to the upside, 37.56 is going to be your call trigger, followed by 38.96 is going to be your first PT for XLRE. Now the thing to also take a look at as well with XLK is your technology, so it's going to be related to QQQ. So just keep that in mind. That sector is going to be related to QQQ. We immediately take a look here at the volume. Seems pretty balanced. We have had a nice move here to the upside. We did get a decent retrace here. So if we want to take our fibs and take a look at our retracement, we did wick off of that 50%. So if we want to play puts to the downside, 146.51 is going to be our put trigger, followed by our first PT is going to be 142.85. Now, our invalidation level for puts really would be 151.51. Wow, that was a little difficult to say. And then our immediate PT after that would be 152.62. We does look like this has been a level of resistance here for a while for us, actually. Let's just draw this little box out. Can we get a little zoom in here? Yeah, let's drag this all the way over. All the way over. Yep, definitely has been a nice, this volume imbalance here, and this is the reason why you got to draw out volume imbalances, guys. This has been a hard level for us. We pushed hard into it, and last week we got rejected into it, so just got to keep that in mind. If we take a look at XLU, which is our utilities sector here, wow, that absolutely moved last week. So let's delete a couple of these lines. So you're going to be looking for the 2-2 continuation for the strat perspective. So 69.96 is going to be your trigger up on the week, followed by 71.89 is going to be your first PT. Now, if we do take a look here and want to play puts, remember your invalidation levels for puts is obviously going to be your call trigger. For calls, it's going to be your put trigger. So 66.85 is going to be your put trigger. To the downside immediately would be 65.59. We are building a pretty decent squeeze here, and it's showing it's moving towards the upside. We can couple this together with volume that's stepping in as well. So if anything, this is going to squeeze to the upside is what I would be looking at. That's just my personal opinion, but play the levels and just play it out, guys. So TLT here. TLT for me has been really, really interesting because with what's been going on with the Fed and what's been going on with the banks, we've pretty much been more or less for the whole entire year stuck within our range here. And you can really see that this tight consolidation is taking place. You can see that there's a lot of pressure coming in here of buying pressure stepping in the treasuries, which is going to push down yield prices and push the price of treasuries up. So remember, with treasuries, yield goes down, price goes up, yield goes up, price goes down. They're inverse of one another. So full time frame continuity, green to the upside. You got that 2 down, 2 up reversal on the week. Now the main question is, can we take out 109.08? If we can take out 109.08 and close a body above this level, you just gotta look to the right and just see this massive PMG that is absolutely beautiful, I gotta say. If we want to play this to the downside here, our put trigger would be 105.70, and then we would take a look here at 103.60 would be our next level. So really, we've come up here and we've bounced and we've played this down. It's pretty much a trader's paradise. You're like, okay, all right, well, this has been trading within a range. It gets to the top, all right, we buy puts. It gets to the bottom, we buy calls kind of thing. It's been pretty darn easy with treasuries. Now let's talk about good old Dixie here. Dixie here on the week is coming into a demand area. You can see that we previously wicked off of this all the way back in May of last year. We also wicked off of it here in January, and we also wicked off of it last week. So that's one thing that I'm really going to be taking a look at here. We got a squeeze building as well. With Forex, you can't really see volume, so volume is completely irrelevant here. But the huge thing that I want to point out is if we do trigger up on Dixie, which is going to be at 103.05, we have a decent sized move and a couple upside targets very easily that are reachable within the week. We got 103.95 followed by 105.10. And if we really wanted to get crazy and pardon my language, shit hit the fan really, 105.83 would be our last target on the week, and you could just continue lining them up. We do see a squeeze building here. We do have time frame conflict here. We do have the monthly and the quarterly that are red followed by the year. We're inside on the year. So just keep that in mind. The dollar is going to move when CPI happens, which is also going to affect as well TLT, which is going to indeed infect all the sectors and all that kind of stuff as well. If you guys want me to do a video about how Dixie and how TLT really like affected the market, just drop me a comment down below and I can gladly go over that. But let's finally wrap all this video up. Apologize, thank you for being here. If you have been here the whole entire time, I got a little bit of a surprise at the end for you guys, especially if you're a strider. Now, for the first ticker, pardon me, on the week that I really want to talk about, I want to talk about knocking on heaven's door. I'm sorry, I had to make the reference. So really with knock, we've got a lot of our time frames green here. We're inside on the year, which isn't a bad thing here. But if we take a retracement here of the yearly, notice where we already bounced off of. We've already bounced off of the 50%. And come on, TradingView. If we really want to line it up as well, we bounced off of the 618, which is one of my favorite fibs on the week. So we got this bounce off of the 618 as well. When you put the 618 fib up here, you can see this is a very well-known bounce level to say the least. And the next thing that I see that will draw a rectangle out here is we got a massive massive fair value gap here that we got to deal with. So our call trigger on the week is going to be 476.26, moving it to the upside. It sounds absolutely bonkers, but your trigger, your PT really on the week is going to be 518.03. I mean, you could come back here if you really wanted and go like 498.50. If you wanted to as well, you could take 50% of this gap. 50% of this gap is going to be 493.33. So you can see that this is definitely going to be an interesting setup, and it's going to be one that I'm going to be watching, especially with all the foreign news going on and all that kind of stuff. It's going to be something to take a look at. Now, the next one we're going to talk about here, this is a stock that I've personally never played, but I looked at the setup and I was like, well, god damn, this is interesting. Let me know in the comments down below if you've seen a triple inside week where you literally had a shooter, hammer kind of thing. We also got this volume imbalance as well to the upside to take a look at. And that's really interesting. Like the TA in me says, okay, this is literally a bear flag. Well, if I look back here, we've bounced off of this level several times before. Like we've grabbed liquidity from this level. So this almost to me is like wondering, like, is XLF and something going to happen this week where the Fed talks and financials is just going to reverse and just kapow all the shorts that are out there? Like, it is definitely something that's very interesting to me. You can see that the selling volume has decreased and buyers have started stepping in as well. We do have all of our time frames to the downside, but we are inside on the week and we are, my bad, we're inside on the month and we are inside on the quarter. So let's take a look at the monthly time frame here. So really, when I take a look at this, we have a massive two down after everything that happened. Even clearer here on the monthly time frame, we swept sell side liquidity here. So this could be one of those plays that you buy a lot of time out on and it just keeps going and going and going kind of thing, because this to me is almost setting up for what I would think would be what's called a kicker pattern, which is basically where you have an inside bar and then just gap up and it just says see you later kind of thing and just burns everyone. Like I said, banks do have earnings starting on Friday. They're also going to report next week as well. Let's take a quick look here at the quarterly time frame. At the quarterly time frame, you got the 3-1. Really, you got this wick as well. Relative equal lows. Like this just is starting to scream to me upside kind of thing. But remember, if you want to play your triggers here, 34.48 is going to be that trigger for puts immediately. Well, my bad. Not 34.48 is going to be that trigger for puts. 32.72 is going to be that trigger for puts. And then to the downside, golly, this is a stretch. 28.36 would be your first PT on the quarterly time frame. If we bring this back to the monthly time frame, you can see that it's going to be our trigger as well on the monthly time frame with 32.72, followed by that same exact target as well. So really, the downside on this one for me, it almost seems like this is going to be a reversal. It's just going to take some time to set up and it's just going to knock all the shorts out of here. Now, if we want to hop back to our weekly time frame, we'll talk about our third ticker here, and that is Kroger. Yeah, I went deep on this watch list, to say the least. Kroger for me is a very interesting setup because when I take a look at this stock, we had a nice move here, came up, we obviously made all-time highs, grabbed buy-side liquidity, and we've came back down here. We're kind of trading within what I would call a price action range. Shout out Zeus here. We're pretty much trading within this range for a good amount of time. So we're coming up here, got to the top of the range. What are we looking to do? Short it back down to the bottom of the range. So really, you could keep your stop here at 50.15, and I would count it as a body closure on a high time frame. So 4-hour, daily, whatever time frame you want to go with above this line would be my stop, and then my target would immediately be 42.70. You see that we do have a squeeze forming here. Could easily roll over. In the past week, a lot of sellers did step in as well. So Kroger, pretty much on most time frames, is red. Yearly time frame, it is on the inside as well. Now let's talk about this next one here that I have charted out that's really interesting to me is PayPal. PayPal is definitely got an interesting setup here. I talked about Enphase a while ago that had a double inside bar setup and then it literally went 3-bar on us and we were like, wait, what kind of thing? But we have this double inside hammer with relative equal lows. So 72.28 is going to be your put trigger to the downside, where you would be taking a look at your first PT being around 71.09 to the upside. I gotta delete this here. 75.69 is going to be your immediate call trigger, followed by your first PT being not there, but here at 77.11, and then to the upside at 79.27. We do have this descending trend line as well, and we have an ascending one too, so we're coming to a point where this is going to squeeze, which makes sense because the squeeze indicator is saying that one is present. We do see a lot of buying volume as well, so I'm curious to see if this is going to move to the upside. We are inside on the month, we are inside on the quarter, so let's take a look at those time frames as well. So we got the 3-2 down. What are we going to do here? Have we touched 50% in the previous level? I would guess so. Yeah, we're pretty much right at it. 75.18 for the previous month. And then on the quarter, we're double inside on the quarter. So this is going to be really interesting. So if we take out, so our quarter trigger is going to be all the way here at 88.63, followed by a PT here of 95.57 on the quarterly time frame. So PayPal, if this wants to play out right, we got a massive failed 2 down here as well that almost went outside bar on us, which was nuts to say the least. We went inside on Monday and Tuesday, 2 down, bounced off of this bottom level. So this is definitely seeing a level. We could have just swept liquidity as well again. And we're just waiting for this move to go to the upside. It's almost like this stock kind of has a vibe of like some news is coming on it. And the next one that I want to talk about on the week is going to be gold. Gold for me is in a very interesting spot because with macro news going on here, a lot of people are fleeing to safety. As well, gold kind of swept liquidity here. We didn't get the full PT all the way up here of 190.30, so we could still see more upside on this. But I'm starting to think with everything that's going on, if the dollar starts rising, we're going to see gold start falling and all precious metals start falling because the dollar is going to start becoming worth more. It's going to pull apart. And we see here that we got a decent amount of selling pressure. We still have a lot of present buyers because a lot of people are definitely worried about what's going on here. So on the week, if we wanted to play calls, we would play it above 188.86 and to the downside as well. The play puts, we would have 183.32, and then we would play down to 180.69, and then we could play down here to 176.21. We do have this imbalance as well that we need to point out. So could gold make this move in 1 week? I highly doubt it, but we got a lot of news on deck here kind of thing. This to me almost is kind of giving me cup and handle vibes, so maybe we're just going to sit here and consolidate and we might chop within a range for a little bit and then make the move to the upside and grab buy side liquidity at 193.30. Who really knows? But really, that's what I got for you guys today. If you made it to the end of the video, here's your little special surprise. For the straters out there, all I got to say is something's coming. I'll see you in the next one. Peace.